So the numbers that came out for this week, we have average hourly earnings that went up 4%.
Yep.
We had the non-farm payroll that was way higher than expected, so 254,000 versus 147,
Hmm.
and up from 159,000 from the previous reporting period.
Yep.
We have and then the unemployment rate dropped from 4.2 to 4.1.
Good
Um,
signs.
well, these are good signs, right? These are good signs. And so what I was thinking about previously was that the Fed was cutting 50 basis points because they have access to the economic reports before we get them. And I thought that they saw some weakness coming in the future and that they wanted to go ahead and cut now preemptively. That they didn't want to be behind the ball the way they were with the inflation, with raising rates a couple of years ago. Then these numbers come out and you're like, hey, wait a second. Not only did you guys cut, you cut more than you normally cut, and you're saying everything is fine. One thing I didn't put in the slide here is that Jerome Powell spoke at the NABE a couple of days ago, and his whole talk was about how everything's fine and good, how the market's resilient, GDP is up, and everything is great. And no one asked, okay, so then why did you cut 50 basis points? You're supposed to do that when a problem is happening.
Hmm.
Do you have any feelings, any opinions on this at all?
I do. I think the main indicator that the Fed or what the Fed is likely signaling here is that they're reprioritizing their focus from inflation risk to recession risk. So as we prolong high interest rates, we're keeping the cost of capital, pretty high for businesses, and that has obvious, impacts on the economy. It's actually what they're hoping for in the process of trying to curb inflation. Well, we've nailed it there. We've hit the target rate. We've achieved the goal, but in doing that, we're still keeping that risk of recession alive. And I think the aim is, of course, to try to curb some of that risk. So I think they were pretty aggressive in their stance and aggressive in their approach to try to get back on track, to eliminate or at least reduce some of that potential for recessionary uptick in data. The data that they were looking at obviously gave them the confidence to say, okay, this is enough of an opportunity for us to pull back by 50, thereby not increasing the likelihood of continued inflation or reversal in the inflation trend, but also not exacerbating this recessionary trend problem.
Well, do you remember I think in May or so, when they were talking about, when the news cycle was talking about the potential rate cuts, they were thinking that we're going to get 25 basis points in July.
Mm-hmm.
And that one of the reasons that they might do that is that they wouldn't want to do it close to the election, the U.S. election, because that would be shown as favoritism or trying to get the incumbent reelected. And then they didn't cut in July, so then they were like, people were saying, okay, well then they're going to wait till 2025 because they're not going to want to do it during the election season. And then smack dab in the election season, they cut not by 25, but by 50 basis points. And if the economic weakness is not there, or at least they're not saying anything about it, then the case for that this was entirely political seems to be pretty good. Like, that's what I was expecting all these headlines to be talking about. Uh, uh, Powell cuts 50% with a good growth data. This is completely a partisan issue, and I'm not seeing that at all, which makes me put on my conspiracy cap and I go, "Hey, that's then probably what the reason is." Did it strike you at all now, like that? Hey, maybe they are doing it for the election?
I just feel like I would be speculating. I mean, if I operate under the belief that the Fed is truly focused on economic data and there aren't hidden biases behind their decisions to impact other parts of the political landscape, then I would say, from a practical perspective, I feel like they're truly data oriented and they're operating, objectively. But it's tougher for me to speculate on the things I think you're talking about.
So how about if we add on to the gumbo the longshoremen, the strike that was supposed to be happening, and then they're like, no, we're going to postpone the strike to January 15th. Does that then put more tinfoil on the head and be like, what? Who postpones a strike until after? What is happening?
I mean, sure, and no one wants to rock the boat right around an election period. However, as traders, I think I'm interested in ripping band-aids off and getting right to the point so that we can actually start to see the volatility we need in markets.
Well, what I like about it is that if the Fed does not need weak economic data in order to stimulate markets, um, that means they're fine with the stock market going up 50% between now and like March. Like they, they're fine if it does happen. They're fine with it, right?
Mhm.
Because stimulating to this degree, while the rest of the central banks around the world are also stimulating, to me says, all right, hats off. Let the horses run. We can have crazy upside between now and at the end of next year,
Yeah.
and that we shouldn't really expect any significant drop, any prolonged significant drop until well into 2025.
Possibly. I mean, obviously, today's market reaction was very bullish, and we had a nice gap open. So, at least from the data perspective, the market responded pretty positively. And I think if we see a lot of this data continue the trend we're hoping for, which obviously avoids any signs of a recession, I think that's highly probable that we'll get there. At the moment, it looks like the futures market is pricing in about a 98% probability of a 25 basis point cut in November
Right.
and another 25 basis points in December. So we're still heading towards, a little bit cheaper of the cost of capital, and potentially some improvement across major sectors that obviously would benefit from that. But if the inflationary effects are starting to abate as well, I think that's all good news. So I'm all for it. I think that's obviously good news for Bitcoin as well.
Well, I do think it means though that the inflationary effects that we're going to see are going to be postponed to. I think I tweeted this out. Is going to be postponed till next year, because the wealth effect here that can happen will be very similar to what we saw in 2020. A bunch of money goes in, assets go up, more spending occurs. People don't curb their spending, and then if we have any sort of supply chain issues because of the strike that supposedly will start next year, then I think we see 10-15% inflation by the end of 2025, beginning of 2026. But that's not our problem today.
Well, I think it's also worth pointing out that this particular strike is sort of isolated to one part geographically in the United States, and that the effects of a supply chain issue on that part of the coast, I think it only represents about a third of overall imports into the United States. And also, it's only specific industries that it would impact. If I remember from some of the news articles, I think it was a big portion of the pharmaceutical industry would have been impacted, but the effects from an inflationary perspective would take a while to really be seen. Especially for retail,
Right.
they're holding a lot of inventory onshore already, and so it would take a while to deplete those inventories before there's really this emergency on the line. So if something did start again in January, we wouldn't see immediate effects from an inflationary perspective.
Fair enough. All right, so I'm glad that you popped the my inflationary concerns there, because
Okay.
what I'm actually the other side of it is, um, so you're right. The longshoremen, they don't control all of the goods that are coming in, and their automation that's happening for longshoremen are showing that in the United States and some other countries, that more of these jobs are being taken by AI systems and robots, and that to me, even though that's hugely disruptive to the industry,
Mhm.
it's sort of like, well, as a consumer, you sort of like want that, right? Like you want industrialization. It's bad for farmers, I get that, but we want chairs and widgets and stuff like that. So the if this is a sort of like birthing pains for this automation process that's happening within our industrial sector, then it really opens up the possibility that costs come way down, potentially costs come way down for wholesalers and retailers, and that new avenues open up for new businesses and new ideas and new products and stuff like that, that can be imported in and exported out. And so this means like rumblings. It's what I would want to see before major systemic change that could potentially lead to like a golden age of opportunity.
Yes. Yeah, and I think the right attitude to have too is that we need automation in the ports. We are like embarrassingly behind other countries in terms of robotics and automation at the ports. And I understand the concern there from a worker perspective, but we would need to shift and retrain a lot of those people to start using new technologies. We need to embrace a lot of this change. Ultimately, I think at the moment, the impact from automation has had about a 5% effect on the overall industry. So we've got a lot of room to, really be concerned about the amount of jobs that would be lost by automation. But as with any type of industry change, we're going to gain a lot of upside from efficiencies that we need as an economy, and a lot of those jobs get shifted into new industries, which start to crop up all the time. So it's a tough one. I think we need a balance of investing in innovation and also protecting workers at the same time.
And what's the trade? Long
What's the trade?
automation.
Long
Long
automation.
automation. Yeah. Any
Are we
of these
back to
systems that
NVIDIA again?
absolutely. Why not? All roads lead back to these automation trades. It's like the long-term trend is essentially guaranteed. Like, who's going to argue against that? Fine, you can make the argument against like nuclear power. You can make the argument against certain types of agricultural practices, but automation. Who's not going to want lower prices, higher safety, faster transportation, all that? I mean,
Mm-hmm.
okay. And then we'll see when automation comes for the self-driving. That'll be a whole episode in and of itself, because
I'm
that's
all for it.
22%. 20% of the jobs are driving. All right.